dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.
Hello and welcome to Liberty Nation Radio, heard coast to coast on the Radio American Network. I'm your host, Mark Angelides. On today's special edition, we are talking the politics and the profit of the Venezuela incident. Please remember, Liberty Nation Radio is sponsored by LibertyNation.com, where you can access podcasts, breaking news analysis, and a range of biting and brilliant shows to whet your appetite for freedom and your fondness for the great American Constitution. Welcome to Liberty Nation Radio, heard coast to coast on the Radio American Network. I'm your host, Mark Angelides. We're very fortunate to have with us today Liberty Nation's economics editor, Mr. Andrew Moran. Now, Andrew, thanks for being here, first off. Now,
Buenos dias.
Buenos dias to thee as well. Andrew will be the new chief economist of Venezuela under the Trump administration. No, I kid. But yeah, that is what we're talking about today, Andrew. Absolutely. It's the politics and the profits of what's happened in Venezuela. Now, to give me your initial take. So when you heard the news, what were the first things that occurred that Nicolas Maduro had been extricated from Caracas? What were your first thoughts?
307 billion barrels of crude oil and nearly $2 trillion of critical minerals. That's the first thing I thought of when I woke up on Saturday morning to the regime change.
Somehow I knew that was exactly what you were going to answer, which is fortunate because that's also what I want to talk about. So Venezuela is a big oil producing nation. How does this change things? Now, obviously, there's a lot of changes, but practically, how does it change things? So there are still companies in Venezuela that are still drilling. Have they been drilling at capacity? Is it likely that investment's going to flood in to try and really capitalize on what's happening, or what's your?
Well, yeah, I mean, to your last question, I mean, absolutely. If the United States is going to maintain influence for years to come, and they're opening up production and making it more competent, because for years it's been state owned, and the government has been one producing the oil, but they've been completely incompetent, because in the 1990s they produced about 3.5 million barrels a day. They exported about 3 million of that. But today they're producing about 800,000 barrels per day, and most of that is from Chevron. Chevron, if you remember, in 2019, the Trump administration imposed sweeping sanctions on Venezuela, and then Biden, reimposed those sanctions. But both administrations granted a sanctions exemption for Chevron. So Chevron has been the lone American company there, and they've had a joint partnership with the PDVSA, and that's a state-owned company that operates the oil industry. Now, when it comes to that, I mean, yeah, absolutely. The oil markets right now are not reacting as much because they find short term, there's not going to be a supply shock. There's not going to be any significant disruption. But as time goes on and more supply comes to the markets, then the consensus is that there's going to be downward pressure to oil prices. Right now, they're at 57. Some say it's going to hit below 50 in the coming years.
It was 54 a couple of weeks ago, I think, wasn't it?
WTI the last time at time of us speaking, it said 57. Maybe went up from 54 because of the geopolitical tensions in Ukraine and Russia, and also Saudi Arabia and Yemen.
So there's a very good chance that within a week or two, American companies and other countries are going to be trying to get their investment in there, because 800,000 barrels a day, considering they were using 500,000 barrels a day. As you pointed out, they did 3.5 million. They exported 3 million. There's left them 500,000 barrels. And that was decades ago. And their usage of oil hasn't gone up by more than 300,000 barrels in decades. It's highly unlikely. So my guess is that they're energy-wise, they're just barely scraping by now, right?
Yeah, absolutely. When you read the market notes of what's happening in Venezuela, they attribute to several things. One is that their infrastructure has aged incredibly, that the government didn't make any new investments to their oil jacks or to the production capabilities or refinery, whatever the case. The other one is that some people are blaming the sanctions, that it was U.S. sanctions that prevented Venezuela from taking a full advantage of its oil resources. But I think the other conversation about this when it comes to oil in Venezuela is the refining process. If you look at the type of oil that Venezuela has, it's heavy crude. Now, in the southern United States, the United States has 6 of the world's largest heavy crude refineries in Louisiana and Texas. So when production starts accelerating in Venezuela, the United States is going to benefit incredibly. I mean, everyone talks about oil companies, Chevron, Exxon, ConocoPhillips, whatever the case. It's the refinery companies that are going to benefit far more than oil companies because they have that infrastructure already in place to take full advantage of. They'll have to start building more of it because they already have it. That's the big thing that everyone should be monitoring, not so much the oil companies.
So there's this is definitely going to impact the U.S. economy in several ways, I think, and that's really what our listeners and viewers are most interested in, is how it affects them. So you've just mentioned that, of course, the refining process. Well, I mean, they could send it further up to Canada. I believe there's a refinery in Canada in your neck of the woods. Just the one, though, right?
Okay, so with this,
you got to ship that further. Sorry, I'm just teasing it.
If we had this Keystone pipeline, Canada wouldn't have this issue that it's worried about right now.
Yeah.
But so if you want to talk about Canada and in the broader sense, the U.S. economy,
yeah.
Canada now doesn't have any hand in negotiations, trade leverage, nothing whatsoever. In short term, not going to be much issue, but long term, now that the United States has 300 billion barrels in its backyard to take advantage of, it doesn't need to import, 6 million barrels a day now from Canada, and they're not beholden to any Canadian interest. So this year in 2026, there's going to be negotiations for the USMCA, the United States Mexico Canada Trade Agreement. Now, every 6 years, as part of the agreement, they review the deal. Now, Canada's leverage was oil, shipping its oil to Canada to the United States. The United States doesn't do that anymore. So what does Canada have that U.S. would want? Not much steel anymore because Trump is trying to make American steel great again. Automobiles, he wants to make American automobile great again. Oil, that's out of the way. So Canada brings nothing, maybe timber, lumber, but that's it. So Canada is on the losing end of this Venezuelan operation.
Yeah, I mean, you could always import Tim Hortons coffee, which I know is one of Canada's great.
Brazilian. Tim Hortons is owned by a Brazilian conglomerate.
They might just import it directly. The new Keystone pipeline is the real black gold coming down. So there's a number of ways this is going to impact the U.S. Number one is there'll be money in the U.S. from all the refining process through Louisiana and Texas, right? The 6 biggest going. There'll be more leverage for the USMCA against Canada because Canada's not going to have the oil leverage anymore. There's going to be American companies investing bigly, as President Trump might say, in Venezuela, and that's going to produce domestically back home as well. Are there any down? Oh, sorry, please. Another one is that.
And one more, low inflation too, lower price inflation. And if you have, because right now, I mean, over the past year, inflation cumulatively has gone up about less than 2%. You know, compared to the previous, the first year of the previous administration, went up 6%. And one of the reasons that oil prices have just fallen dramatically over the past year. The WTI has fallen about 22%, and gas prices are $2.80 a gallon national average, and that's skewed by California. So let's say, about 2,000 states are below 275. If that continues, you have less inflation. So everyone talked about the affordability crisis, but things are stabilized, and they will continue to stabilize too with oil prices as low as they are. Plus natural gas. I mean, there was a natural gas sell-off before you guys started talking. So even that's on the lower end as well. So everything you talked about plus low price inflation.
You know, inflation continues to baffle me. Not the mechanics of it, but the public reaction to inflation. I mean, it's almost like I don't want to say an inflationary miracle at Christmas time, but you know, it's so under control compared to how it was. And then you look at the polling for Donald Trump, specifically on inflation, and listeners and viewers, you can go and do this. Go to libertynation.com, check out the public square. We have this complete polling operation there that brings in everything from everywhere, and it's beautiful to look at as well. But Donald Trump, his approval on inflation is 26 points underwater. 60% of people disapprove of his position, of what he's done with inflation. And inflation, cumulative over the last year, 2%. Well, under 2%. And it just baffles me that people, there's 60% of people that don't think that, hey, cumulative interest under 2% over a year is a good thing, right?
Well, it's because for a lot of the things that people are still frustrated from the high prices that occurred under the previous administration. And Trump kept saying, I'm going to bring prices down. But a lot of the things are still, prices are still either elevated or they've increased or they have not come down substantially. But I mean, everyone should accept the fact that prices will not return to pre-pandemic levels. I mean, that's just not going to happen. But energy bills, for example, that continues to go up. One of the reasons is because of the heavy demand from the AI data centers. That's gonna strain household budgets just based on the utility bills alone. So I can empathize and sympathize with the American people who are so frustrated by the cost of living. But still, I mean, even home prices have stabilized. Gas prices have come down. Food prices remain elevated. I mean, up in Canada, I mean, that's our biggest driver of inflation is food. The printing press has been going up, so you're having QE. But borrowing costs, they've come down. So overall, I mean, economic conditions are a lot preferable than they were, and financial conditions a lot preferable than they were a year ago.
We're going to continue the conversation on Venezuela and what that means politically after this short break. Don't go anywhere.
We dismiss history at our peril.
Liberty Nation Radio with Mark Angelides.